All right, listen up, folks. We're talking Pfizer today. PFE, that's the ticker. This pharma giant has been on a wild ride, hasn't it? From the dizzying heights of the pandemic to a slump that's got many investors scratching their heads, or maybe even tearing their hair out. So the big question, the monster question, is Pfizer a hidden opportunity, a coiled spring ready to pop? Or is it a value trap, folks, a stock that looks cheap but will only cost you money? We're gonna dive in, peel back the layers, and give you the tools to think for yourself, because that's what we do here. Now let me be crystal clear, like a perfectly cut diamond. This isn't stock picking advice, no way. I'm not telling you to buy, sell, or hold anything. This is about education, people. It's about learning how to analyze a company, how to look at the charts, and how to understand what makes a stock move. Think of this as your homework assignment, your boot camp for becoming a smarter investor. Your money, your decisions. Always remember that. My job is to get you thinking, to get you asking the right questions before you even think about pressing that buy button. We're going to look at Pfizer from all angles. What happened? Why did the stock take a nosedive after being the hero of the hour? We'll get into the nitty-gritty of the technical signals. Are they flashing green, red, or a big old yellow caution light? And what about the fundamentals? Is there real value here, or is it just wishful thinking? We need to be honest, brutally honest, because the market doesn't care about your feelings. It only cares about results and future prospects. So, grab your notebooks, sharpen your pencils, and get ready to learn. We're on a mission to understand Pfizer, not to fall in love with a story or a past victory. The past is the past. We're looking forward. What could drive this stock up? What are the pitfalls? By the end of this, you'll be better equipped to do your own research, to make informed choices, and that, my friends, is the ultimate goal. Knowledge is power, especially when it comes to your hard-earned cash. Booyah! Let's get to work. Pfizer, a name that became a household word, synonymous with hope during the dark days of the pandemic. This company, a behemoth in the pharmaceutical world, stepped up big time. They delivered a life-saving vaccine, Comirnaty, in record time. Then came Paxlovid, the antiviral treatment. Cha-ching! The revenues poured in. The stock price? It went to the moon, baby. Investors who were in early were dancing in the streets. It felt like the good times would never end for Pfizer. They were printing money. But here's the thing about Wall Street, folks. It's a, what have you done for me lately kind of place. The pandemic thankfully started to wane. Vaccine demand, it dropped off a cliff. Paxlovid sales, they tumbled too. Suddenly those record profits weren't so record-breaking anymore, and the stock price, it followed suit, heading south in a hurry. From hero to, well, not quite zero, but certainly a stock that left a bad taste in many investors' mouths. It was a brutal lesson in how quickly sentiment can change. Ouch! So why are we even talking about Pfizer now, with the stock beaten down? Because that's when savvy investors start sniffing around. When a company with a long history, a massive research pipeline, and significant global presence gets hammered, you have to ask, is the selling overdone? Is there a gem hidden in the rubble? Investors are looking at the lower price and wondering if it's a bargain. They see that Pfizer is still a massive player, still generating billions and still has drugs in development. The big question is whether the post-pandemic hangover has created an entry point. The interest isn't just wishful thinking. Pfizer has a history of innovation. They have a deep portfolio beyond COVID products. Think about their work in oncology, inflammation, rare diseases. These are huge markets. The company is also trying to pivot, making acquisitions to bolster its pipeline, like the Seagen deal for cancer drugs. So, investors are watching. They're weighing the decline in COVID revenues against the potential for future growth from other areas. It's a balancing act, a tug-of-war between past disappointments and future possibilities. That's why Pfizer is on our radar today. All right, let's get technical. Technical analysis isn't a crystal ball, folks, but it can give us clues, hints about what the market sentiment is, where the buying and selling pressure might be. It's like reading the tea leaves of the stock market. For Pfizer, as of today, June 5th, 2025, the picture is, well, it's complicated. Let's break down some key indicators. First up, the Relative Strength Index, the RSI. This tells us if a stock is overbought or oversold. Ideally, you want to see it climbing out of oversold territory, below 30, as a sign of buying interest returning. Right now, let's say PFE's RSI is hovering around 40, not deeply oversold, but not showing massive strength either. Next, the MACD. That's moving average convergence divergence. Sounds fancy, but it's about momentum. Is the momentum bullish? meaning upwards, or bearish, meaning downwards? We look for a bullish crossover, where the MACD line crosses above its signal line. That's a buy signal for many traders. As of now, let's imagine the MACD for Pfizer is trying to curl up, maybe teasing a crossover, but it hasn't given a definitive bullish signal yet. It's like a runner antsy at the starting line, but the gun hasn't fired. Still waiting for that confirmation. Support levels are crucial. These are price points where the stock has historically found buying interest and bounced higher. Think of it as a floor. Has Pfizer tested a major support level recently and held? Let's say it's currently sitting just above a known support zone, say around $25 to $26, but the bounce hasn't been super convincing. We want to see a strong defense of that level, with buyers stepping in decisively. Volume is key here too. Are big players buying, or is it just retail nibbling? Light volume on a bounce is not what we want to see. We need conviction. Finally, moving averages. The 50-day and the 200-day moving averages are widely watched. Is the stock trading above or below these lines? A stock below both is generally considered in a downtrend. If PFE is still below its 50-day and definitely below its 200-day, the dreaded death cross might have happened months ago. That's a bearish signal. So if we tally it up, RSI is May, MACD is waiting, support is being tested weekly, and it's under key moving averages. Maybe one or two of these are looking better, but overall, the technical picture for Pfizer right now, in our hypothetical 2025 scenario, screams, caution, wait for more confirmation, don't try to catch a falling knife. Okay, so the charts might be saying hold your horses. But investing isn't just about charts, is it? We need to look at the company itself, the fundamentals. And for Pfizer, one of the big attractions, especially when the stock price is down, is the dividend. Yes, PFE pays a dividend. For income-oriented investors, this can be a sweet deal. You get paid to wait, hopefully, for the stock to recover. But is it safe? Is it juicy enough? We need to check the payout ratio. Is Pfizer earning enough to comfortably cover that dividend? That's homework for you. Then there's the question of fair value. What do the Wall Street analysts think Pfizer is actually worth? You'll see a range of price targets out there. Some might say it's undervalued, a screaming buy based on future earnings potential from its non-COVID pipeline. Others might be more cautious, pointing to the revenue cliff from the vaccine and Paxlovid and the challenges of integrating new acquisitions. Don't just take one analyst's word for it. Look at the consensus. Understand they think it's cheap or expensive. Is it a value or is it a trap? That's the million-dollar question. Now let's talk about something powerful. Reinvesting those dividends. DRIP, they call it. Dividend Reinvestment Plan. If you take those dividend payments and use them to buy more shares of Pfizer, you get the magic of compounding working for you. It's like a snowball rolling downhill, getting bigger and bigger. Over the long term, reinvesting dividends can significantly boost your total returns. It's a patient investor's game, but it can be incredibly effective. Think about it. More shares mean more dividends next time, which means even more shares after that. But what could shake things up for Pfizer in the future? Catalysts, people. We need catalysts. Keep your eyes peeled for news on their clinical trials. A successful new drug, a blockbuster in oncology or another key area, could send the stock soaring. Earnings reports are huge too. Does the company beat expectations? What's their guidance for the future? Listen to the conference calls. And don't forget about activist investors. Sometimes a big fund comes in, buys a chunk of stock, and starts pushing for changes to unlock value. That can be a major mover. These are the things that can change the narrative. So, you're intrigued by Pfizer, you see the potential, but the charts, as we said, are a bit wobbly right now. What would strong technical signals look like? What should you watch for before even about making a move? First, that RSI. We'd want to see it decisively climb out of oversold territory, say above 30, and keep heading towards 50 or higher, showing sustained buying interest. No more wishy-washy behavior. We want strength, real strength that shows the tide is turning. Then, the MACD. We want to see a clear, undeniable bullish crossover, the MACD line slicing up through the signal line, and ideally, both lines moving above the zero line. That's a sign that momentum is shifting to the upside. No fakes. We want to see it happen with conviction. And remember that support level we talked about? We want to see Pfizer test it, hold it like a fortress, and then bounce higher on strong volume. Big green volume bars, people. That shows the big institutions are stepping in, not just a few bargain hunters. And those moving averages. For a truly bullish signal, we'd want to see Pfizer's stock price punch through its 50-day moving average. And then, The big one, reclaim the 200-day moving average. A golden cross where the 50-day crosses above the 200-day would be a very powerful long-term bullish signal. These things don't happen overnight. It takes time for a trend to reverse. Patience is your friend here. Don't jump the gun based on one good day. Look for a pattern of improvement across multiple indicators. Now, one last time, and listen closely. This is not financial advice. I'm here to educate, to make you a smarter, more informed market participant. Everyone's financial situation is different. Your risk tolerance is unique. You must do your own research. Dig into the company reports, read the news, understand the risks and the rewards. Talk to a qualified financial advisor if you need personalized guidance. The goal here is to empower you, to help you learn how to analyze these situations for yourself. Investing is a journey, a marathon, not a sprint. Learn, grow, and make smart choices for your financial future. Booyah!